you were being in the industry for 25 years, right?
25 now. Yeah.
How did you get involved?
Yeah, that's a very good question. Actually, I have lived in New York for 23 years before moving to Virginia. In 2019, I moved to Virginia, but in 1987, I came to New York. And then I was doing real estate. I had my real estate license. And at that time, we did not need loan officer license. Anybody can do loan without the license. So I was doing my real estate, and I think, mostly in the community. And every time when I ask or send them to another lender, my clients always send me the documents and I send it to the lender. So the lender said, "Hey, Asma," I still remember his name. He said that, "Why don't you start doing the mortgages when you're just literally doing the whole work?" I said, "Oh, I did not know that I can do it." He said, "Yeah, you can do it." So I started mortgages, and I liked more the lending side of the system or the process instead of the mortgage side. So sorry, the real estate. So I kept doing it, and then market crashed in 2008. So there was no real estate selling or buying. So I stayed with mortgages. I did a lot of modification at that time because nobody was buying or refinancing. So I did a lot of modification. Then I stayed with financing. I think because I am a number person and I like doing mortgages more than real estate.
That's cool. I'm gonna go back to that 2008 question and the interview because I'm really curious how all that happened. But let's now focus on the things that people want to know. People who are buying homes. What are the most, I would say, important stuff when you're buying a home? Is that the rate you're gonna get, the guidelines, or choose the correct program?
Yeah, actually, a combination of everything. The most important thing is for a buyer, a borrower who are just lending for 30-year mortgage. They should know what are they getting. So very important is the cost of the mortgage, what kind of mortgage is it, how long would it be, and is it a fixed payment or it would change with the time. And obviously, how much money do you have to put down, and it all depends. But it's a combination of everything.
And what clients you work with mostly? Are those the first-time home buyers? Are those investors?
I do not just work with first-time home buyers. Most of the clients are referrals, so they are even going up or going down. Like, if they're older age, they're just like buying, selling their single-family homes or going into senior facility or going into. I do a lot of reverse mortgages too. That's a very important thing too, but we will talk it about later. And then first-time home buyer, there are a few. And they mostly are second or third time buyers. I wouldn't say investors, but buying up or buying down.
That's interesting. And how do you stay up to date with all those programs? Because I know there's so many. The rules are changing all the time. The rates are changing all the time. I know in my industry, in the real estate world, we're getting updates from our association and all that, but they don't really want us to know everything. Of course, everything legal, yes, but there's tips and tricks that we also find out from some other sources. Is that same in the loan industry?
Yes. Actually, mortgage industry is more compliant than real estate industry as an agent. And we have to be compliant on everything about the guidelines, about the different products. And the mortgage industry changed more rapidly than real estate industry. It's just in the real estate industry, I think we had last year, the NAR thing that changes the commissions, but our industry, mortgage industry, changes anytime and every time. So we have to be up on everything. I'm very active on LinkedIn. I have a lot of, I research a lot, I read a lot, and I am connected with MBS Highway for about the rates and everything. And a lot of different websites that I'm connected with, Fannie and Freddie Mac, for the guidelines and everything. So I am in actually all over. I just read a lot, and I try to be up to date on, especially on the guidelines.
Yes, staying informative. But I think people, at least the people I work with, they prefer, or not they prefer, but their first approach, especially their first-time home buyers or maybe the older generation, their first step would be, I don't want to work with a broker. I don't want to work with someone who is just not working directly with a bank. I'm going to go to my Navy Federal. I'm going to go to my Bank of America. Is it the case that should be the first step for them to go to their own bank? Would they get a better rate than working with some other brokerage?
Yeah, that's a very good question. To be honest, even a lot of time, it is a better way. And a lot of time, even I suggest my clients to check with if their credit union and check with the credit union, because what's the difference in it? Because us mostly retailers who we close the loan in house and then we sell it to secondary market. But the most of the banks and the credit union, they keep service their loans, and they make more money in servicing the loan instead of doing the loan, as compared to the retailers or us brokers. We sell the loan, so we make whatever we could make, we make upfront, like closing the loan. So if definitely rates are better in credit unions and banks, but their guideline, because they keep the loan, so their guidelines are very strict. So most of the time they can get better rates, but they cannot close the loan because most of the time the guidelines wouldn't match. So us, we have better guidelines, and it's not a lot of difference in the rate, just maybe a 0.25% or something. But obviously, it's a 30-year mortgage, so it would be different.
Yeah, the first time I ever got familiar with that loan resale is when I was doing some car rental business a couple of years ago, and we purchased one car, and then somehow that car was under some different bank. Like we didn't even know. Nobody told us, and almost we got in trouble. Thank God we figured out on our own at the beginning. And then afterwards, I think even the home that you helped me also purchase, it was through
Yeah.
that loan was afterwards sold. I honestly forgot which company was it,
Right.
but it was an FHA loan, and then it ended up being with some other bank. But the important thing is for people to know is if the bank or the broker, whatever the lender, they sell your loan, your terms are staying the same.
100%.
Yeah.
There's no difference in it, because if it's a fixed loan, there's no difference in it. Whatever the difference, sometimes people call me after 6 months or a year, and they say, "Hey, why my mortgage increased?" I said, check your taxes and insurance, because there is no way that your mortgage payment would increase because it's a fixed loan, but the taxes assessment, because the property value have increased, so taxes increase and sometimes insurance increase too. So that's the only difference. But no, there by transferring it to a servicing company, it wouldn't change anything.
Yeah, I see. And before we go now to different type of the loans,
Mhm.
do people at this time, because interest rates now are much higher than back in 2020, right?
Mhm.
Do people wait to purchase the home based on your data, based on your experience? No matter the okay, investors are different animals than actual first-time home buyers or primary home buyers. But do people tend now to wait for rates to go down, or they're buying because I'm sure that you are aware as I am, is sure homes are now, yeah, especially here in North Virginia, very expensive. But when the rates go down, those prices are going to go up.
Exactly. And it would be a bidding war. So they cannot buy that anyway.
Yeah.
So but it depends. People want to wait, but if you just coach them and then just tell them or show them the whole scenario, everything is on searches. You can Google it and you can show them that when the rates go down, it was a bidding war going on. So people were putting 50, 60, even 80K out of pocket just because they couldn't get a house. So it's a good time to buy, and then you can refinance 6 months, a year, even 2 years. So you're only paying higher mortgage for 12 months or 16 months. And so when they understand it, they could buy it. But again, a lot of people, they couldn't afford it because of the higher interest rate, so they have to wait. So it's both circumstances. It depends on their circumstances. If they can get a house, they will go for it. If they cannot, obviously they have to wait.
Yes, and right now we are kind of in that pivot moment in our government. Are they going to cut rates? Are the yields going to follow? It really depends of the whole thing, not just if the chair is going to cut the rates or not. And we cannot predict. We really hope the rates are going to go down. I'm telling to my clients, it's going to go back to 3%. I was like,
No.
it's
No.
it's very low. It's probably impossible. Not in near future. Not in near future.
No. It should not even go, because it was not good. And
Yeah.
that's what that we are seeing all these problems, because people are sitting on 3% loan. So they don't want to they just cannot afford, even if they can afford it, they're in their mind, it's 3%. They just don't want to go even for 5%. Even though when I started, it was 8.99 the first interest rate and 11.9 the second. So whenever people ask me how the rates, I say the rates are very good, and they just look at me, what are you talking? It was 3%. I said, yeah, because you just saw 3%. You just came to this country 5 or 6 or 7 years ago. But when I started in 2000, it was 8.99. So the rates are still good. And again, remember, Alex, the rental prices are going up too. So that's what I told them. You are paying somebody else's mortgage anyway. So why wouldn't you pay your own mortgage? So, but
Yeah,
again,
people,
everybody is different. Sometimes they understand, sometimes they don't.
for sure, for sure. But people are also, like, you're never gonna own your house because you still have property taxes and all that. Sure, but you're gonna build your equity. You're gonna build your equity, and just make sure to find a good deal. Like,
Mhm.
don't try to, unless you have a ton of money to waste. Don't buy a house that is overvalued. Like,
Exactly.
keep looking, keep searching. No matter if you're investor, no matter if you're just first time home buyer, I suggest people that I work with, if you have some knowledge with painting, with some handyman work, don't look for the perfect home. Look something that has a potential, and that's how honest. That's what I learned with the first home that I bought, and it helped me with. And we're gonna just now go to that loan options. The first home that I purchased, it was with your help. It was through FHA loan, and it was our primary home for a bit. It was in Louisa County here,
Mhm.
and we were looking to buy home there. Our budget was relatively low. I think it was up to $200,000, and I was self-employed. I'm still self-employed, but back then it was like when 6 years ago. Uh, the income was much different. I didn't know many things about how to get approved, the credit score. I mean, I knew, but not like I know now. And we had to pay a lot of some credit cards to get our score increased and all that. The point I want to say is, uh, I had the two choices: to buy a home that is completely ready to move in, and it was like a $50,000 more than the home I purchased. The home I purchased was not awesome looking, but it was much cheaper. It came with 2 acres of land, which other one was only 1 acre, and it had a potential. That potential, the reason how I saw that is because of my experience with some other stuff, remodeling and all that. Because when you see the home, don't look at the home how it is right now. Look at the home how it can be.
Exactly.
So if you can save $50,000 off your mortgage, and you can just invest, if you have time, of course, invest some hours of your own work, or like buy some painting, Home Depot, Lowe's, figure out, build your own deck, like make some nice landscaping. You can increase the value of the home very rapidly with your own skills. And then if rates goes down, you can again refinance, and you even take cash out if you want or no, but get a better rate. So when it comes to those type of loans, my first loan was FHA, and now everything we're doing is either conventional or investment loans. I assume for the first time home buyers, should they take advantage of FHA loans?
Yeah, 100%. I love FHA loan. A lot of loan officer, and you must have this experience when you talk to them about FHA loan. They just oh, that's a hard loan. It's not hard. It's a very good, straightforward loan, and every loan can be hard. It all depends how are you structuring it. So literally, FHA loans are my best loans. I mean, VA loans are very good too. Let's do a quick difference between VA loans. The most important thing is that that's only for the veterans and their spouses. So not everybody. I cannot get a VA loan. Not everybody can get a VA loan, but it's a beautiful loan, 100% loan with no MI, and rates are very good too. And their debt to income ratio are very higher than regular loans because for veterans, and we appreciate there. So and the second loan is US another form of USDA loan. That's 100% no MI loan too, but that has geographic limits. So not every person or every home can get a USDA financing because of the geographic limit. But that's a very good 100% no MI loan too, and low credit and good loan to value and good debt to income ratio. Then compared to FHA and VA, like we were talking about, FHA is a very good loan for a first time home buyer. First of all, their back end ratio is very high than conventional or any other loan, like 50, you can go up to 57%. So even if they have like a lot of new buyers or a lot of people who just got out of the school and got a job, so they don't have much savings, so they can go 3.5% down payment. That's very low. And then they most probably have student loans. So with the FHA loan, it's a good thing that you can count those student loans and it's at the back end of the debt to income ratio. So you can go higher bet. So first time home buyer FHA loans are the best.
Are the FHA only for the first-time home buyers, or anybody can use them?
Anybody can use them, but if they already have a home, there's only strictness in there that you cannot use the rental income for the vacating home. Unless you are moving out of, I think, 100 miles or something like that. So you cannot use a vacating rental income, like somebody have a home, no matter what, conventional or finance, FHA, and they are buying another home. So and they want to keep the first home, so they cannot. They have to be qualified with both mortgages. That's the problem.
Is it only for primary home?
Yes, FHA is only for primary home.
Got it.
And when go ahead. Sorry.
You go ahead.
So conventional, it's a good thing that conventional, there are a lot of loan program with 3% down for a first-time home buyer, or even a second or a repeat home buyer. And you can, and if you have a home in as a primary right now, and you want to just rent it out and buy another primary house, so you can use the rental income for the vacating property. So we are not hitting them. The lenders are not hitting the buyer or borrower with two mortgages. So that's the difference in FHA and conventional.
Let me ask something about that rental income from the first property. So let's say I'm moving out from my current home, right? I want to buy the new primary home, right? And the current one is going to become a rental.
Right.
The lender is going to look at this home as a rental home. Right. They're going to calculate the potential rental income, or even if I find the renter during the transition period and the lease and all that, right? Two questions I have there. The new home will still go as a primary home. It would not mix with investment, because the current primary home is becoming investment home, right? Conventional. But the loan stays the same. The terms stay the same, right? Okay. Yes. So can that rental income also be based if the buyer, right, the client, wants to use that current home as a short-term rental, or it only has to be a long-term lease?
Yeah, there are different guidelines for short-term rental, but it's good to show it as, at least for the first year, show it as a 12-month lease and a long-term rental. And another thing is that it's very important to understand that we can use the rental income for the current primary or the vacating house just to offset the mortgage. We cannot add, even like you are getting $3,000 rental income on the property that you're vacating, and your mortgage is $1,000. So we cannot use the $2,000 extra as an income, unless the borrower have the experience or they have other renting property like investment property. So we can only offset the mortgage. So we are not hitting that mortgage against you.